Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Steve Freed, our VP of Grain Research, and Alan Bush, our Senior Financial Economist. Let's start with Steve. Steve, what is the latest on the Ukraine and Russian war and its impact on the grains?
Well, I think that first of all, some of the key Russian banks were no longer allowed to use SWIFT, which is the international place where people can move money back and forth. Also, the central bank was sanctioned, and so the Russians had to come out and raise their interest rates to offset a drop in the ruble by 30%. Right now, it looks like no Russian vessels are being loaded for grain. There's talk about force majeure and talk about vessels of especially corn out of Ukraine being switched to the U.S. The Ukrainians mined their ports so that no Russian vessels could get in. So it could take months, even if there was some peace accord, which is doubtful, before exports could resume in the Black Sea. So I think from a price standpoint, corn, soybean oil, wheat are all sharply higher today after being sharply lower on Friday. And I think that the longer this draws out, potential for higher demand and higher prices.
All right, Steve, let's switch over to South America. What is the latest on South American crop sizes and the impact on U.S. demand?
Well, last week, the World Outlook Conference did not change any South American production or increase any U.S. demand. The markets thought that was kind of negative. What I'm hearing is that the soybean crops in South America will be lower, and that dryness in the central part of Brazil will actually may reduce the corn crop in Brazil. So I think we're looking at possibility March through June, record demand for U.S. corn exports, maybe a little bit increase in bean exports. Problem with the beans, China's not buying U.S. old crop beans because of the high inverse in prices, but they are buying new crop. So I think all in all, the lower South American crops will increase U.S. export demands for corn and beans, tighten the supply, and will also contribute to higher prices.
Are there any new updates on the U.S. 2022 spring and summer weather and what impact on prices that may have?
The National Weather Service came out with a 90-day outlook that was pretty much drier than normal for the southern plains and parts of the western corn belt, and wetter than normal for the Delta, Tennessee Valley, and the Ohio Valley. So if that's true, I think that we'll have some problems in the east getting crops planted on a timely basis. The wheat crop could be stressed because of dryness. We may have some delays in getting crops planted in the west because of dryness. And if the summer is dry, prices could move higher. So I'm afraid that right now, the best guess of weather forecasts could be bullish prices.
All right, moving on to Alan. Alan, what will the Federal Reserve Chair Powell say in his semi-annual monetary policy testimony to Congress this week?
So, by law, the Fed chairman has to testify 2 times a year to Congress. So that is coming up this week on Wednesday, he will testify before the House Financial Services Committee. And then on Thursday before the Senate Banking Committee. So those are both at 9 o'clock Central Time. So he will talk about, of course, the economy, inflation, economic growth. But I think he'll also discuss the geopolitical risks that are to the economy. I think that if there are any surprises, they may be dovish surprises. So once again, those are Wednesday and Thursday, and that will be a key market moving point for the financial markets.
And what other economic reports will affect financial futures markets most of this week?
Okay, we do have the beige book coming on Wednesday. That's the book that is produced in advance of upcoming FOMC meetings. Also on Friday, we'll have the employment situation with non-farm payrolls expected to be up 390,000. Manufacturing payrolls guessed at up 20,000. And then the unemployment rate expected to be 3.9%. But all of these reports currently and over the near term are likely to take a back seat as far as market impact to the geopolitical events, which of course have dominated and most likely will continue for some time.
And Alan, what is your opinion regarding the Fed raising rates this year with all this geopolitical risk that's going on and the central bank policies?
So the Fed is still on track to hike rates this year multiple times, but the probability of a 50 basis point rate hike at the upcoming March 16th meeting has diminished dramatically. At one point, there was an over 50% chance that they would raise at this upcoming meeting. Now that probability is vastly lessened now to only a 25 basis point increase from the Fed. In fact, the probability is now for an 87% chance of just a 25 basis point increase. The other percentage is for 50. Also, we have other central banks meeting this month. We have the Bank of Canada. That's on Wednesday. They'll probably have a hawkish tone to their commentary, maybe raising rates. Wednesday, of course, that's Wednesday. On March 10th, we'll have the European Central Bank. And then on March 17th, the Bank of England, pressure is on the BOE to hike rates as well. So all these central banks, at least the major central banks, are on track to hike rates. But in light of the geopolitical issues, I believe these major central banks will be walking back quite a bit from their hawkishness this year.
All right, well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, please visit admis.com. Thank you.